Hey everyone, and welcome back to the channel. The slide in the markets continue with the S&P 500 index down nearly 8% in the month of June. But are we starting to see a bottom? Are we getting hopeful? Just this past week, the great ARK Invest Fund manager Cathie Wood came out and said, we are in fact already in a recession. Now this is particularly interesting timing because over the past few months, or what seemed like a year, she has continued to pour money into ultra growth stocks like Teladoc or Zoom or Roku, and her funds have been getting crushed. The ARK Investment Fund, the flagship fund, ARKK, is down over 85% over the past 12 months. And on top of that, you get to pay a nearly 1% expense fee for those tremendous results. So are we at a bottom? Who knows? But I'm going to continue to invest in high quality blue chip stocks on any of these pullbacks that we're seeing. I believe there's more pain ahead. As we're going to start earnings season here in the next week, we're going to see some revisions from management teams, which is going to lead to price target cuts here in the near future. So these next quarter or two, we're also going to see the Fed continue to tighten its monetary policy, increase interest rates while selling off bonds. So make sure you buckle up for these summer months here because there could be more pain ahead. With that being said, the purpose of this channel is to kind of give you a story on what I'm looking at. What am I doing in the market? In today's video, we're going to look at my dividend portfolio update. Go through all of the positions I have in the portfolio, look at what I've added in the month of June, look at my dividend income, and look at the performance and lack of performance for some of my top positions. And if you're new to the channel, make sure you hit that subscribe button down below so you are notified anytime we drop new content. Also, if you love dividends and the topic of dividends, then make sure you hit that like button down below, as that is huge for the growth of this channel moving forward. Also, if you're new to investing or looking for a great new platform, then definitely check out WeBull. Right now, they're giving away 6 free stocks for any new account that's opened and funded with any amount of money. That is 6 free stocks that could be valued up to over $3,000. So definitely take a look at the link down in the description below for WeBull. With that being said, let's jump into the video. Hey everyone, my name is Mark Rushin. I am a CPA and not a financial advisor, so make sure you perform your due diligence before investing in any stock or ETF. Please do not take this as financial advice. So if we head over to the chart here, we can see that. Let's start with the S&P 500 index. We're looking at a chart here over the past month. You could see that the S&P 500 index is down roughly 8% over the past month, and on the year-to-date chart, we can see it is still in bear market territory, down over 20%, 20.12 to be exact. Now let's head over to our dividend portfolio and give you a fresh look at where we're at as of the end of June, beginning of July here. So we have a cost basis of nearly $185,000 currently invested in the market, and we have a market value of roughly $187,000. Our projected annual income is $5,445, and the portfolio has a dividend yield of 2.91% currently. So let's take a look at the top holdings right now. No change at the top there. You can see that the Vanguard S&P 500 Index Fund, that's why it's VFIAX, is still atop there, followed closely behind the Vanguard Dividend Appreciation Index Fund. So both of these are always going to be staples in my portfolio. You can go the ETF route, index route, very similar in a lot of ways, but these are just positions I have had for quite a while in my IRA. In terms of individual stocks and ETFs followed behind that, you'll see some shuffling amongst the top, but as a whole, you're going to see a lot of the same names. We will go over a brief slide that'll show a lot of the moves that I made in June. Again, I continue to try and take nibbles at this market. I'm not going full in because I don't believe the bottom is completely in yet, and really no one does. But I prefer time in the market over trying to time the market. So at the top here, Johnson & Johnson is our top position, followed by Bristol Myers Squibb, Lockheed Martin, Vici Properties. There's the Schwab Dividend ETF, which is one of my favorite dividend ETFs if you're looking for one, stock ticker SCHD, followed by AbbVie, stock ticker ABBV, And then there's another S&P 500 index fund. Again, this is a different account. The reason I put all of these instead of just showing you my Fidelity account is because I have stocks on WeBull, I have stocks on Fidelity, and I have stocks on a few on M1 Finance and also on Vanguard. To round out the top 10, you will see Apple, which you know that stock ticker. And if we add up the weighting for these top 10 positions, you will see that the top 10 positions in this portfolio make up roughly 55% of the entire portfolio. You can see a list of the other stocks there. In green, I always like to keep my cash position so you guys can see where that fluctuates from month to month. It's been around a top 10 position down to as low as 15. So still we're hovering around 13 with $3,500 left to put to work. Not a lot of changes here in terms of new stocks. So with that being said, right now we have 36 different positions if we count cash, 35 different stocks, ETFs, and index funds. So let's move on over to what we have done here in the month of June. So I have this slide up here you can see on the screen, and this is kind of going to give you a June portfolio summary. So in terms of income this month, we had dividend income of $612.87, which I took as cash and redeployed along with adding extra cash to the portfolio. And this is where we added it in the month of June. You can see that we bought 40 shares in Store Capital, stock ticker STOR, triple net lease REIT, very similar to that of Realty Income, which is a fan favorite. Store Capital is a position I've owned for quite a while. I sold it off, but then it has cratered here in 2022. So just looking to build that position back up. Also bought 9 more shares of SCHD, which is a dividend ETF that I mentioned, a very popular one that I'm a big fan of for those of you looking for dividend ETF exposure. We opened a new position with PLD. They are a warehouse REIT. They pay a solid dividend yield, so we added 8 shares over there, just opening up a new position. We also added 20 new shares of Altria Group, stock ticker MO. Altria Group had a very rough June. The stock sell-off at the end of the month. It had a terrible month when news that the FDA was going to suspend and pull off all of the Juul-related products here in the US. Now, if any of you follow Altria Group, they have a 35% stake in Juul, but the company has essentially almost written off that entire investment that they made back in 2018. In my eyes, Juul does not have a huge impact on the company, so I took advantage of this and added 20 new shares. I also added 7 new shares of Bank of America. Again, Bank of America has a great impact as interest rates continue to rise. They have a very large mortgage portfolio and could be, benefit greatly as interest rates continue to rise there with their net interest margin. So just that is my largest bank. JP Morgan's also one that's trading at a discount right now based on my due diligence. Now let's take a look at performance in terms of the dividend portfolio. I'm going to move over here to my Seeking Alpha portfolio that I build out with the same positions that we have. We'll go over here to performance and let's look at the past month. Over the past month, you could see that, as I mentioned, Altria Group was down huge on that Juul news, so that stock fell nearly 22%. But once that fell, we added below the $42 mark, which is around where it's sitting right now. We also saw Broadcom take a big hit with the chip stocks, down 16.7%. That's a huge company that I really like and would like to build my position in. They have a solid yield and they're growing at an insanely strong clip. So definitely take a look at Broadcom. Let me quickly show you this. I'm not even joking around here in terms of the dividend growth rate. Over the past 5 years, you can see that Broadcom has increased its dividend on an average basis of nearly 35% per year. They have dividend growth of 11 consecutive years, and this is on top of getting a solid 3.4%. So definitely take a look at Broadcom right now. On a forward-looking basis, it looks quite intriguing. So we saw that, over the past month, Altria Group down big, Broadcom down big, and Medical Properties Trust, another REIT that just continues to get hammered. There's a short report out. So investors are really trying to get a good handle on where that stock has been, or where it should be really, down 14.5% over the past month. In terms of positive positions, AbbVie, just continues to be a very strong performer. Year to date, still up 14%. It's had a struggle over the past few months, but bounced back this month, up 5%. Starbucks came back 4%, and Realty Income was up 3%. You can only see there's really only another handful of stocks that were really green for the month of June. And on the year, our best performing stock still is Bristol Myers Squibb, Lockheed Martin, and AbbVie, followed by Raytheon, which are the 4 positions that are up double digits year to date. So, again, S&P 500 down 20%. These guys are up over 10% each, but Bristol Myers and Lockheed are up over 20%, so strongly outperforming the greater market. However, let's go to the weak performers. Now, we didn't own all of these this year. T. Rowe Price is a new addition to the portfolio when it started falling like this, but T. Rowe Price is down 41%. Again, that one is connected to the greater market, so with the market down big, T. Rowe Price is going to be down big as well. Simon Property Group, malls have been hit. So that one is it's an A quality mall. They have a very strong portfolio. They're with a very strong credit rating that is able to withstand any economic backdrop. Obviously, it'll be slow for a little bit if we do dip into a recession here, although I don't see it being a huge, long, drawn out recession. But it's also not going to be an extremely quick one like we saw in 2020. So Simon Property Group, this could be an opportunity for investors to gain a very high yield and a very strong company at that. And then we already touched on Medical Properties Trust, which is down nearly 35% on the year. So those are some of the weak performers on the year, as well as some of the strong performers we've had over the past year. Now let's move over to our dividend calendar. So I created this tab here to really just show when dividends are coming in. So it's got all of our stocks listed over here to the left and when they pay it. So you can see something like Realty Income is going to have, you're going to be getting paid each and every month. That is a monthly dividend paying stock. But most stocks on here are quarterly. The yellow highlighted ones are ones that have not been paid yet. So you can see here the month of June, everything's been paid and we made $612.87. Here in July, we're projected right now to make $436.89. And on the year, we're going to collect $5,000. Again, if we go back to the portfolio, this is projecting from right now. So if someone made a dividend increase in the middle of the year, this accounts for, from right now, over the next 12 months, we're going to make nearly $5,500. So for the year 2022, we're on track to make a little over close to 5,100 right now. So we'll see where that kind of comes in as things go up. But super excited about June. That was my largest dividend income to date. So in terms of monthly dividend income, so super excited about that. We can kind of just see down in the chart down here how the blue is 2022, the red is 2021, how we were just outperforming in a great way. We put a lot of money into the market last year, and that has certainly carried on to dividend income this year. With stocks that have been tanking in 2022, this could be a generational opportunity for many young, long-term minded investors out there. So that's what this tab is. It's just focusing on the monthly dividend income to be able to track that. Now let's go to the dividend portfolio performance. So this is just going to track our monthly performance. A lot of red on there. We had a good month in March, but things have really trickled off. So if we go back to the portfolio on the year, we are down 7.7%. But if you recall, when we look at the S&P 500 as a whole, which is a benchmark that I look at, that is down over 20%. So we are outperforming, but we're still losing money. So we're just trying to tread water here. We're trying to build up our dividend income stream because remember, we have lofty goals here. We're still early on in this road, and we're going to keep funding money. When we see pullbacks in the market, I don't need this money right now. I want this money in 20 plus years from now, and I want it to work and start compounding to create more passive income for me moving forward. So that's really the update right now as of the month of June. Again, it's going to be very interesting to see the quarterly updates that companies are going to start reporting here in the next few weeks. I think banks kick it off in the next week or so. So we're going to start seeing what, Bank of America is a name that is on our dividend portfolio. What have they done? What are they seeing the rest of the year in terms of earnings estimates? So definitely pay close attention to those. And I think I'm going to try, at least for me, I'm going to try to take advantage of big pullbacks, big overreactions. Take a long-term view. Look at a forward thinking. We're not trying to see a stock gain from now until December. We're looking for a stock to gain from now until December 2028, December 2038 or so. Take a long-term minded approach and just dollar cost average. You don't need, if you have $5,000 to invest right now, Don't throw 5 grand in all at once. Maybe we nibble at, 500 here, 700 there, and just dollar cost average on your way down, because once this thing moves, say we get a truce in the Russia-Ukraine war right now, or say that the Federal Reserve decides to reverse course in the next year or two. Things can move very swiftly, and you don't want to be caught holding the bag saying, I think the market has lower to go, but I'm just going to keep waiting. I'm going to keep waiting. That's why I think dollar cost averaging is a great way to build a great long-term portfolio. Again, I hope you enjoyed the video, and if you haven't done so yet, hit that thumbs up button, as that is huge for the growth of this channel. Also, take a look at that WeBull promotion. 6 free stocks if you click on that link down below, open a new account, and fund it with any amount of money. Definitely take advantage of that. And with that being said, again, I hope you enjoyed the video, and we will see you next time. Take care.